My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my tube. I try to get back to everybody if I can. I've been doing this for 52 years. I worked for IRS for 10. I got a bunch of subscribers. I've been on the national news. Matter of fact, I was in the national news last week on News Nation. You know, many people have to pay their IRS debt because their financial statement dictates that they have to make a payment. There's three ways you can close an IRS case. It's been three ways for a long time, even since I was working there. You can either close it by being put in a currently non-collectible or hardship, a payment agreement, which we're going to talk about today, or through an offer in compromise. So I've worked over 10,000 cases, so this is the way all this goes down. So your financial statement truly dictates how IRS is going to close your case. That's how important. That's how important your financial statement is. It is. So let's say you've ruled out currently non-collectible. Most people do that because they're making too much income. The offer is out of the question because you have assets that could pay it. So now it leaves you with two type of payments. You can go ahead and make a streamlined payment, which you can pay the debt off, or you can make a regular part pay agreement with IRS. The reason why you need to listen to me is I used to do this at IRS. I used to approve payment agreements because I reviewed these, my inventory. My inventory dictated this. So that financial statement that you have is everything. And most people who call themselves or use the wrong company, this is truthful because I get all the crap here. Everyone calls me and they dump what this company did, what that company did. I can't help but that you know what you did. You call the salesperson and they don't know what the hell they're doing. At the end of the day, the key to getting the right payment agreement is knowing what the National Standard Program is all about. It is that important. When IRS gives you that financial statement, there's a column usually on, if you're looking at the 433A form, it says what your actual expenses are. And everyone's quick to write their actual expenses down. They come out, well, I have no money to pay, or I can pay $300. IRS doesn't care what your actual expenses are. They do in some of the categories, but in the major categories, they're going to remove your expenses and put the IRS national standards in. You say, well, that's not fair. It isn't. And where do they get these national standards from? They get them from the Department of Labor. There's statistics available. You can find out what they are. Google, what are the IRS national standards? You'll find out what they are. For food and clothing, housing and utilities, which you're going to say, oh my God, you're kidding me. For car payments and car expenses. And that's what rockets everyone to a payment agreement they don't want. So if you're looking at a payment agreement, you better listen to this video. You better look up the IRS national standards, and you better be prepared for a shock value coming, because it's going to happen. And if you don't make a lot of money, you're a W-2 wage earner and you pay your bills every month, you got a little left over, you're not going to do bad. If you're self-employed or you make a lot more money, this is going to be a wake-up call for you, and that's why you need solid representation. Call me if you need me. Give me a subscription. I always tell you what you need, I promise. Subscription, please, and thank you.